Good afternoon, everybody, and welcome to this week's Mastery session. Today's date is Monday, the 19th of May. Now, as always, everything we say at the Trade Tribe is for educational purposes only. It should not be construed as financial advice. So, big welcome to you guys who are here live, and of course, hello to those catching up on the recording this week. So, today's session is really about us tying all of the bits we've done together, like and tying it off essentially, because what we move on to in week 11, which is next week, is portfolio management. And portfolio management is about how do you do this, but on the big scale, on the long term scale? How are you going to do this for the next year, 5 years, 10 years, 20 years, and beyond? So that's coming up next week. So before then, we need to make sure that we're really comfortable with the individual investments first. Okay, so that's what today's going to be about. And I've got some more bits to give you, just to make sure it's nice and straightforward. So before we hit record, then we had a question from Blaze, and the question was, I'm paraphrasing here, but what do you do if the stock doesn't come back up, essentially? Or is there been a stock that doesn't come back up? Was that essentially the question? Yeah,
That's exactly it. Yeah.
great
I
one.
hope that doesn't happen though.
Yeah. Yeah, good caveat with that. Yeah, preface it with that. Good. So the way we essentially try to avoid that is firstly the selection process, right? Picking the stock in the first place. So we're always investing in fundamentally very strong stocks, which is what the whole FinViz section's about. So that's like the biggest way you can avoid such an issue. Okay. That's probably like 90% of it. After that, let's say you invested in a really strong company and then something unexpected happened, which does happen sometimes, and it drops further than you expected. So let's say you pick the 40% calculator and then suddenly some crazy news came out overnight and it dropped like 50% or 60%. And you're like, oh wow, it's a lot lower than I'd anticipated. I wasn't prepared for this. Now, in those situations, there are always two options. Okay. And we actually do a section, like I'll show you the strategy for this on next week's session. But you can always either do nothing and just wait for it to come back up. Okay, i.e., like you've picked a fundamentally strong company, even if they're having a bad time, a bad month, whatever, you can be really patient and it will take longer than you'd anticipated, but you know, that's fine. Or the alternative, which does happen, is you can choose to invest some more funds towards that stock, okay, to keep lowering the break-even point. But there has to be a strategy to that. You don't want to just keep throwing money at a stock that's dropping. So I will teach you that next week. But they're always the two options you have, essentially. And I've actually got some real-life examples of ones that have done that, that fell a lot further than expected. So I'll actually use that as a real example. Let me get this on the screen for you guys, because I like to use the real-life situations to demonstrate this. All right, so there is a company which was on the Fundamental 13 called SMCI. Now, if you look in the Facebook group, the community, you'll occasionally see people mention or reference SMCI. And the reason people aren't talking about it quite a lot is because, well, for some of us, we've actually been in, a lot of us have been in this stock quite a while. Actually, I think, let's call it 9 months, just for random. It was the last summer, let's say. But the problem with SMCI, it was really good, like amazing, all of that good stuff. So where is January, July last year? Yeah, about there, let's say. Um, they got investigated randomly for their accounting practices. Yeah, so as you can imagine, to be on the stock market, you have to adhere to quite strict rules. Like, it's obviously not like a free for all. And they got investigated because they weren't meeting the rules. So as you can imagine, just that news alone scared a few investors, which means the market suddenly drops, right? People sell, they want to get out of that, fine. We can see it actually fell an awful lot afterwards, fell all the way down here, which was a lot further than a lot of us anticipated. I don't know if I've still got good lines on this. Uh, yeah, let me use these lines. Ignore these green ones, these are quite irrelevant. Um, cool. Okay, so as you can see, I was investing back here. And then it started to fall quite considerably. Now, what I did, because that news came out and it was falling a lot, I actually stopped investing. Okay, so this was probably a key. This is why this worked well. So let's say I had, I don't know, 30, 40, 50, 60 to invest. It hit my 30, 40, great, I bought, and then the bad news happened, it started to drop. So I said, right, I'm not going to buy in at the 50 and 60 just yet. Let's wait for this news to pass, which probably makes sense to you. If they're under investigation, not ideal. So that happened. It's quite a slow process, as court cases can be. And it took it back. I think went all the way into February this year. So it's quite a slow thing. But again, I was just sitting there. I hadn't invested all my money. I was just waiting for it. So I was patient. And then in February, they passed the court case. Turns out they didn't do anything wrong. They just had a really bad CFO who just wasn't very good. So they got cleared of all of that, and then the stock in a very very short space of time shot up. What is that like? Well, 160%, which is quite a nice little rise there. Now, having said that, I still followed the the strategy you learned last week, the profit strategy. So they bearing in mind, like I've been in this a while, you can see it went above my break even. The temptation might have been to just sell and get out of it. But, following the rules, I didn't because it only went up, look, 6% above my break even. So I didn't hit my 10%. I didn't get my stop loss in. So cool. Then it started to fall and now it's starting to rise again. So I've just been patient with it. Uh, just knowing that, well, since then it's gone up like another 73, 74%. So for me, it's just a waiting game. But I still haven't invested that extra money yet that I originally planned to. So my break even could be a hell of a lot lower if I had invested that. Um, I just didn't at the time because I was waiting for the court case to pass. So that's quite a strong position because it means I can still just wait. And if I want to invest some more, I can invest it because I've got the money sitting there to bring that break even down, which obviously makes it quicker to get into profit, right? If you do that. So that's essentially, look, I mean, that's a real investment that I'm in at the moment. So it's probably the best example I could give on that. Uh, and they will happen occasionally, right? Like, obviously, you can't foresee bad accounting practices. Like, it's a bit out of your control. But yeah, when we do, we've got a plan for it anyway. Does that answer?
Then, yeah, that is perfect. Thank you. When
Cool.
you said that was in July 24 when this thing happened, was that the small E letter? Is that the indication of it? Because when I clicked on it, it says like surprise. Should we be
Good
no?
question. So this is actually one of the topics we're going to cover today.
Oh, sorry.
No, no,
Okay.
no. It's a great segue onto that section. So that's all good. So the E's along the bottom here, some of you might be familiar with them, some maybe not. These represent the earnings report for the stock being released. So
Oh,
every
you did
quarter,
mention.
we did mention it, right? Yeah. So
Mm.
each quarter, a company has to release their earnings report for the previous financial period. Now, the reason that they're quite key for us to know is because it's new information coming into the market, right? And whenever there's new information for investors, they take action. They either buy more or they sell more, which moves the price. So when there happened to be, I mean, this was actually quite coincidental. The earnings came up when they got investigated for earnings practices. Maybe that was the reason. I think they were late for filing their report or something like that, which maybe was the red flag there. Um, so yeah, it wasn't directly because of that, but again, kind of linked. But whenever you see these E's at the bottom of your screen, these are, as I said, when the earnings report are coming up. Now, the reason it's important to note that is because if you're going to get a jump in price, or even any of these gaps start to occur in your stocks, a lot of the time, or more often than not, that's when earnings come out. Okay. So the rule that we put in here, or what you can see, I don't think I've told you the rule, have I? About
No.
no, okay,
No,
not repeating
no.
myself. Okay, good. Um, so if you click on like the next E, it tells you when it is, like when the next earnings is. So this one's 12th of August, so ages away. Or you can even look in the bottom right here, it says in 85 days is the next earnings. The only reason you need to be aware of it is if it's within the next 10 days, your earnings, I usually just wait before getting into a new stock. So let's say I was considering a new opportunity today. I was like, oh, should I get into this? I was like, oh, earnings are less than 10 days away. Let that pass first. Just because you don't want to buy something and then it just jumps down loads and you're like, damn, I should have waited. Right. So yeah, if earnings are within 10 days, when you're looking at a new stock, I wouldn't invest. If you're already in a stock, happy, that's fine. Just continue as normal. It's irrelevant. But just in terms of a new stock. Okay, cool. See everyone writing that down. Any questions on that from anyone?
I presume that the colours are green for positive results and red for negative.
Yes. So good point. Yeah. So the green E will mean that they did better than expected, which is like a positive surprise. And the red is they did worse than expected. It doesn't necessarily mean they lost money, for example, or made money. It's just compared to what was expected of them.
Is there any significance to the next expected box being square as opposed to?
But it's just because it can't. If it's green, it will be an up arrow. If it's red, it's down. Obviously, it doesn't know what it's going to be yet, so that's why it's square.
Oh, okay, all right.
Yeah. Also, good point you made there, Ray, about green or red. This isn't logical. Okay, so for example, there could be a green E or like the earnings really positive and the stock could drop. Alternatively, it could be like really negative and then the stock jumps up. Super illogical, okay? So don't try and second guess what it could be. Just know that there could be a jump. Tammy, question.
Yeah, just a follow-on question to something you said. You said that while you were waiting for things to calm down, you didn't invest the
Yes.
funds that you had targeted for that investment.
Mhm.
At what point might you say, I'm sick of waiting, or it doesn't make sense to wait anymore, and I should invest my money
Ah,
somewhere else? Because that was quite a long wait
oh,
with,
somewhere else.
yeah,
Good.
or somewhere else. Yeah. So
Um,
6 months about, right?
yeah, a bit more than that. Yeah, probably
Yeah.
9. So okay, there's two points. It could either be invested in this one, so I just put more into it now, or into somewhere else, which is what you said. So I wouldn't probably move the money to a different opportunity. Rather more likely to put the money into this that I should have just to lower that break even point. Um, that would be more beneficial. But then the question is, well, when do we put that in, right? So for me, I actually set an order. I have set an order on this, funnily enough. I think the order is about at $28. So it's just below here. Where is it? Oh, my order is about there. Okay. Annoyingly, I was at an event on these 2 days, so I missed this. And when I looked at it the next day, I was like, oh, I would have bought in at this price. So I set this order. It hasn't gone back to that yet, but when it does, it will buy some more shares for me and then lower this break-even point quite significantly. Okay, that's what I've done with this one. I wouldn't use the money for a different opportunity, purely because, and again, maybe I'll give you a bit more context when I show the strategy next week. But for me, I'd rather maximize the opportunities I'm already in rather than just have this money and think, oh, think it's lost money because you really don't want to accept a loss. That's probably quite a
Mhm.
key fundamental of this. Um, in any investment, you're better to be, or I'm better to be patient and wait for the profit rather than accept a loss and move on. That's served me very, very well over the years. To give you the mathematical reason for that, not to bore everyone to death, but if you have something, well, let's use it this. Let's say you have something, you put $100 into something, right? And it falls 50%. And you sell, you panic, you're like, oh, I'm sick of this, and you sell it out, and now you're left with $50, right? Because you lost 50%. Well, now you've got $50. How much profit do you need to make to get back to 100? What percentage?
100%.
100% now, right? So you drop 50%, but to get back to zero, you've got to get like 100% profit. So the percentages really work against you in that. So for me, I'm like, okay, so if I can just be more patient and be a bit more tactical and not accept a loss, it's probably way better for me in the long run. So that's why I do it like that.
Can I ask another question on the
Yeah,
back
of
of
course.
that?
Go ahead.
What would you have done if the result had been different? For example, because I come across this in my work, that there are cases of fraud. What if this CFO wasn't just
Mm,
incompetent but criminal and had been embezzling funds, committing fraud to
mm.
the point that the company was severely impaired, or maybe even would have had to file for bankruptcy?
Well, I mean, touch wood.
That's taking it really far
Yeah,
down the
yeah, yeah.
line. But I mean, I see these things in real life, so
Yeah,
that's
yeah.
why I'm asking. What would you have done
Okay.
if things had been different?
Well, I think if it gets to a point where it's on the bankruptcy, then you actually can't do anything, right?
Right, you're
Yeah,
sunk.
yeah,
Yeah,
that's very unfortunate.
but you have a little time before it gets that far.
Yeah, of course. So, if for whatever reason that was a possibility, the bankruptcy side of things, you may make the executive decision to get out. That's fine. Um, Fortunately, I've never had to make that decision, I have to say. So none of the stocks on the fundamental 13 have ever done that. again, touch wood, just
I'm asking because these are things that can happen to very reputable companies that come completely out of the blue. But I think, yeah, I don't know. Even then, if you really base it on the fundamentals, you may be able to recognize even then that something's off.
Yeah. Well, as I said, none of them have come under that. However, the thing that's probably more common, let's say, because that's a really extreme example. The more common one is, and what was a threat to this one is it was almost delisted from the stock market. So like even if they weren't, or there was a guy doing something wrong, they now don't qualify for the stock market, which could be an issue. Now, what happens in that scenario for everyone? And I will say, just not to scare anyone, this isn't that common, by the way. But what could happen if they get delisted is essentially you still own the shares, but they're now what's called over the counter. Okay, so they're basically not easily shared or traded anymore on the exchange like the Nasdaq or the New York Stock Exchange. So they're over the counter. So you still own the asset, but what's probably more likely is you're going to be holding them for a while because they're not easy to trade, right? So less people are trading them. That's kind of the issue. Then the company obviously are doing their best to get back onto the stock market. So once they're back on, then you resume as normal. That could happen. Again, hasn't happened to me, but that is how I would proceed with that. Good questions. Cool.
Okay, thank you.
No worries. I didn't really plan to go down this route on this call, but I'm glad we've addressed all of that. So that was useful for everyone and has not scared everyone into panic. Hey, Anthony, welcome. Good to see you. Just seeing your message there. When shall I restart? Well, whenever you like. Well, do you want to message me privately on WhatsApp afterwards, and then I can give you some proper dates? Yeah, perfect. Good to see you, man. Yeah. Okay, Amy, just seen your message as well. Cool. Okay, right. So just to take us back to the end of last week's session when we did the profit lines, that we set the alerts, blah, blah, blah. Little developments for you. I'm just going to draw these lines on. I know they're not the proper lines, but yeah, is what it is. So that one, and let's say that was that. Cool. So let's call this the 5%. Cool. So as you remember, we had our break-even point last time, the BEP, which was the red line. Yeah, you guys remember that? Basically where you buy the share. And then the next line up, we had 10% profit. 10% profit there. And then next one up was like 15% profit, so on and so forth. Okay. Hopefully everybody remembers that. Now, cool. Now, one thing we talked about then was setting the alerts on the lines. And I believe I showed you it on TradingView. Now, a few people in the tribe have reported that TradingView sometimes lets them put alerts, sometimes doesn't. It's a bit touch and go. So you can use Trading 212 for this. Oh, sorry, let's try it again. Trading 212. All right. So you can use Trading 212 for the alerts instead of doing, the alert button that we mentioned on here, right? So to do alerts on Trading 212, so let's just pick a stock I'm in, well, SMCI, funnily enough, the one we just talked about. Cool. So there's this little alarm icon with a plus in the top right corner. You can see that. Yeah. So after you've placed your orders, you can just click that little alert, and then you just say where you want the alert. Okay, so wherever the 10% line was, just write it in there. Let's say it was $150, whatever it is. Write that in, and then where it says the note, just write in what you want to pop up on your screen, like what's going to notify you. Okay, so it doesn't have to be perfect. It could be, look at your phone. No, I don't know, whatever it may be. Just something that's going to make you want to look at your stock. Okay, I would probably put SMCI 10% profit, for example. Okay, just do that. I would turn off the recurring thing as well. You don't need that. You just click the alarm, price, put your price in where you want the alert, and set price alert. Okay, that's it. So it's nice and simple on Trading 212. Now, I've not come up against a limit to those number of alerts. Like TradingView had a limit. I've not seen the limit on these, so maybe you actually get unlimited of them. So that's quite useful as well. Okay. Would anyone like to ask a question on that, or does that make sense? Yeah, all good. Cool. Okay, so let's go back to the next stage I was actually going to show you. Now, the thing that you don't want to happen, and I think maybe we alluded to this last week, is you don't want to be out in, you're having a busy day, you're a bit hectic, and then suddenly your phone buzzes and it says AMD 10% profit. And then your first thought is, oh my God, what am I supposed to do with 10% profit? Yeah, like you're not going to remember that, particularly at the start. So what I do, and I would employ you to do, is I write the instruction on the line. Okay. So where I've written 10% profit, I would then tell myself, what am I supposed to do at this point? All right. So I'll show you what I mean. So 10% profit. What do we do when price hits 10% profit? Does everyone remember?
Put the stop loss just above BEP.
Perfect. And that is what I would write. So put stop loss just above BEP. Okay. Literally like that. If I wanted to make my life even easier, I could say the exact number I should put the stop loss at. So rather than just above BEP, so my BEP on this example is $110.80. So round numbers, maybe I put my stop loss at 112. Yeah, it's just above BEP. Because can you see there, if I'm out and my phone rings and says, oh, you've hit 10% profit, and I look at this and it says put stop loss at 112, there's zero doubt in my mind as to what to do. Yeah, it's just really easy. It's just making your own life nice and simple because you never know when it's going to hit it, right? You might be, I don't know, out for lunch, you might be in Starbucks, who knows? But you don't want to be having a panic when it does happen. So just make your life nice and easy. Write the instruction to yourself on that line. Okay? Does that make sense to do so?
Yeah.
Okay. So just so you can have a practice of this, I know these aren't all correct numbers, but imagine they are. Have a think. You don't have to shout out, but what would you write on this line here? If you're going to make your life nice and simple, when it hit 15%, what instruction are you going to give to yourself? Have a think. And if you're going to write in the exact number that you're going to do it, have a little think what you would say.
You could set the stop loss to 124.
Perfect. That's
Plus change.
Yeah, plus change. Yeah, you'd write on here, move stop loss to, like you said, 124.63 to 124. Okay, you guys see that? So super simple. Done the work for myself. I'm like, oh great, I'll just follow that. And then you go into trading 2 and 2 and move the stop loss. Yeah. Pretty straightforward on that for you guys. Yeah. Cool. Okay. Anthony, I appreciate you missed last week, so you're probably thinking, what on earth are they talking about? that's okay. Cool. Okay. Fine. So that's the other thing I would encourage you to do for sure. Now, the next part to make life more systemized, to make this fit into your day nice and easy, is it's actually about using your watch list on the right-hand side over here. And we've not really mentioned the watch list for a while now, have we? So the watch list, as the name suggests, is just a small group of stocks that you're keeping an eye on. Okay? The benefit of it is you don't need to remember all of the stocks that you've analyzed or the stocks that you've looked at, because that would be a real nightmare. You just want to be focusing on the stocks that you're actually interested in. So what I would suggest you start doing is when you've got a stock you've either invested in or you've done the analysis on, you're going to add it to this list. And to do that, you just click on the plus button at the top of the list there. And you've got like a little plus up here. Click on that, type in whatever stock it is, and just add it to your list. Okay? I just clicked on Apple and it added it to the list. And that will save it there for you. All right. So then over time, you're just going to build up a list of great opportunities that you're interested in. Okay. So have a little go now. Just add a few stocks to it. So maybe the ones that for those you've placed your real investment with me already, definitely add those ones. So any stock you've invested in, add it to the list. Or any stocks you're considering investing in, add those to your list as well. Okay. All right. Okay, so all sounds very well and good, but how is that saving you any time? Well, because when we talk about doing this in 5 minutes a day, what does the 5 minutes actually entail? Because obviously, once you've done, set your orders, set and all of that, you don't do that again, right? You've done it once, it's done, which is the beauty of this. But once a day, what you're actually going to do is you're going to check the stocks on your watch list. Okay. So I will show you the quick way for doing this. Now, obviously, if you're on your computer, you can just click through your watch list, look at each one and say, oh, has it dropped enough yet to invest in, or are any of my stocks I'm invested in gone up to hit my profit? You can be looking at that. That's cool. But quite a quick way to do this, and I just need to change my camera. Has anyone downloaded the TradingView app on their phone? Yeah. Anyone got that?
Yep.
Yeah.
Some have, some haven't. Okay, cool. Well, if you haven't, write that down in your to-do list for sure. Let me just swap these cameras and I'll give you a demonstration here. Cool. There we go. So, on the TradingView app, to show you how to use it, if you go on, so once you've downloaded it, log in using the same login details that you did for the computer, and your watch list will appear on your phone. Okay. But also, if you click on chart at the bottom there, the second tab, it's going to show you all of the lines that you've drawn on your computer. Right, so everything that's on your computer is now on your phone, which is pretty convenient, right? When we're out and about, you can see all the lines that we've literally just drawn, the 15% and all that stuff. Okay, it's there for me. So when you're out and about, you can just quickly open your phone and look at this. But the reason I'm saying this is quite useful to use your watch list is because this is a little bit more technical. Can you see in the bottom? Let me move this ad out of the way. Let's use it properly. Right. Can you see in the bottom left corner, it says the stock name. Yeah, you can see it just above there. If you put your finger on that, this is really hard to do. I'm not looking at it. Oh. If you put your finger on it, you can actually scroll like a little wheel. I don't know if you can see that. It's flipping through it on my screen. And one by one, you're flicking through your watch list at quite a great speed, right? So if you're just going through that, just like, okay, let's look at this next stock. Okay, done. What about the next one? Done. And you're just quickly flicking through them just to see, is anything ready to invest in that I've been looking at? Or is it time to take profit on any of them? Or whatever it may be. Okay, so that's quite a quick process to do. And if you've got that on your phone, obviously you can do it wherever you are. If you're waiting for something in line, cool, just flick through your watch list, see if anything's ready. Now, some days you'll look at it and there's nothing you need to do. You're like, oh, great. Well, I've finished my investing in less than a minute. Okay. So by having that available to you to look at any time, it will really save you a lot of time rather than sitting there thinking, oh, what stock should I look at today? Like, what have I? You don't want to remember that, right? So save it on your watch list and that'll just be a real huge time saver for you. Does anyone want to ask any questions on that? What does that mean? That's to everyone. Yeah, all good? Okay, cool. Let me just come back to the other camera because this is blurry. There we go. Cool. Okay, so that is that with your watch list. Now, a few more tips for organizing your watch list. Firstly, you can see some of these got like a little red tab next to them. And to add this red tab, you just hover over it. And you see that this little grey bar appears. You can just click on it. It adds a red tab. Now, I would recommend when you do actually invest in a stock, to differentiate it from the rest of them, just add that little red tab. Okay, just so that you, even without thinking about it, can just easily see, okay, cool, there's the stocks I'm in. Yes, you can just jump straight to them. So for those of you who've placed your first orders already, your real ones, feel free to go and add your stock to there and then add a little red tab to it. Okay. Good way to do it. Because if you're really busy one day and you haven't even got 5 minutes to look at your stocks, probably just want to prioritize the stocks you're actually got money in, right? That would make more sense. So you can just quickly all right, let me just look at these quickly, bam, 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 go through those. Okay. You're like, oh, great, these are all good. Fine. That would be the priority. So you can do that because you've got the little red tab next to it. All right. Any questions on that at all there? Real good. No? Perfect. And then the last little tip, I guess, I've got for you on the watch list, because I know some of you are like super organized. You can add in these little headers to it. Like, I'm not saying you should do this one, but like it says nearly ready. You might have like invested. You might have nearly ready, that kind of thing. To do it, to add these in, you just click on these three. Oh, wait, it's moved to there. Sorry. You click on yours, probably says watch list with a little arrow next to it. Click on that and you just click on add section. Okay, that will let you add in a little thing. Oh, I think I've already maxed out my watch list. That's the other point. You've got 30 stocks or 30 positions in your watch list you can fill. Okay, so it almost forces you to keep it quite narrow and tight, which is a good thing. You don't have 100 stocks on there because that'll take forever to scroll through. Yeah, so keep your best stocks on. Right, go ahead.
Yeah, I can remember when I first put TradingView on the phone, I think I took your advice and looked to see if I could put up another watch list.
Yeah.
Is it true to say they've closed that loophole now?
I think they may have. They've been they've been a bit tight recently. I've noticed a few of our loopholes have been closing up. Firstly, the alerts, and then maybe that as well. Because yeah, I mean, I've got so many watch lists. I mean, some of mine I had back in the day, they got like 339 stocks on it. So it was definitely a bit of a loophole. I don't recommend that, by the way. But yeah, back in trading days. But anyway, yeah, that may have closed. I've not noticed that, but potentially. So it only let you create one list. Is that what you're saying? Or have one list?
Yeah, that's what I found.
Yeah. I mean, theoretically, you might not need more than that. Well, you won't need more than that. If for whatever reason you did, I wonder. I think Trading 212 might have a watch list capability somewhere that I've definitely seen this somewhere. Oh, add to watch list. Yes, you could search any stock and just add it to your watch list. Where that goes. Oh, my watch list. Wherever that is. Now the fun is trying to find your watch list. Wherever. Do I know where the watch list is on here? I've never even seen it, I don't think. Oh, sorry, I'm blind. It's up here in the top left. It says my watch list. There we go. You can click on there and it will find it for you. Cool. Yeah, so if you needed to use that watch list, feel free. That's absolutely fine. I think what seems to be happening, and this isn't official, but I'm going to let you guys in what I think. TradingView and Trading 212 are integrating now, and the more they're integrating, it seems like the more features they're removing from the normal TradingView. For example, you can, I wouldn't suggest doing this, but you can click on the home button. There's a little down arrow underneath it. If you click on Advanced View, it actually integrates. You can see you've got TradingView within Trading 212. Now, it's not great at the moment, I would say. All right. They've not quite perfected it just yet. For example, you can see the chart only goes back to May 23, which is not ideal when we're trying to measure March 2020. So we can't do the whole strategy on here just yet. But it is kind of useful because you can see your break-even point automatically on here. You see, so like you see when you're in profit, it makes it a little bit easier to visualize maybe. But yeah, I would only use it for like visual purposes, not actually to try and analyze this stock like the hats and stuff, just because it doesn't have enough information yet. But yeah, the more I see them trying to integrate this and make it a point, it does feel like they're taking it away from the other one. So maybe in a few months' time we'll all be using this. Who knows? Jeff, I think you said, have you got the paid version of Trading 212? Trading View, sorry.
No.
No? Okay, I thought someone might have it. I haven't either. You don't need it. But yeah, so everyone on the free version, you've got 30 stocks on here you should have. Maybe you won't have the alerts for much longer, so you might need to use Trading 212. But yeah, 30 should be plenty on your watch list. I've only got most of these on here just for like demonstration purposes when I'm teaching. There's a lot of stocks in here I would never invest in, so I don't need anywhere near this much either. Okay. So yeah, sorry, Ray. Not the best news for you, but
No, that's fine. Thanks anyway.
No, you're all good, man. All good. Cool. Okay, so putting your instructions on your lines, adding them to your watch list, and of course setting alerts on your lines is a massive, massive time saver. Because also, to be real, I know I'm saying check this every day because you're learning this. I want you to keep the momentum up. If for whatever reason you're actually busy or you're on holiday and you don't check it, well, it's not really the end of the world, because if it drops, you've set your limit orders to buy more, so we'll buy more. If it goes up, it's going to hit your profit alerts and it's going to tell you about it. So even if you didn't check it, you're not going to miss anything. Okay. And in this strategy, there's very, very, very rarely a time where if you don't see that profit alert within the first like 4 hours that you miss out. Like it rarely ever happens. It doesn't barely hit it and then just tanks. Okay. So yeah, don't ever feel like, oh my God, I'm away, I'm going to miss something. You probably won't. All right. Cool. Okay. Right. That is that bit. Um, We've got a few minutes. I was going to say something a little bit more advanced. You guys feeling up for that?
Yeah.
Yeah? Okay, cool.
Yeah.
Right. Obviously, if it's a bit late in the day, you can rewatch this on the recording. That's fine. It was actually off the back of the earnings point that we made. Because something that happens with earnings, as I mentioned, is the gaps that get formed. Now, to be fair, AMD maybe doesn't do it that much, but let's think of a different store, or even Amazon. Okay, they'll do it. So let me just get rid of these lines, whatever that is. Cool. So you can see with Amazon, even this gaps occasionally, like around earnings. So back here, and this is a good example when I said it's not logical. So Amazon did 21% better earnings than was expected last August. Now, when you're a company as large as Amazon, 21% is a fair chunk, right? That's a lot of money. So they did really, really well, and the stock gapped down overnight. Like just jumped down. So that's what I mean by it's not easy to predict things.
Is that likely to be profit taking?
Could be, yeah. It'll be, yeah, people that have decided that for whatever reason they don't want to hold these shares anymore. Could be a number of reasons. Who knows? But yeah, that's what happened overnight. Now, these gaps being formed are called gaps. Okay, it's called gapping, and it happens when the market closes one day, and then overnight something happens. There's some sort of news that comes into the market, so that the next day it looks like the market's jumped. Okay, I believe we touched on this previously, but just to go over it. When the market closes for us as retail investors, that's what we're called. The institutions and some retail investors can still make orders, okay, place orders. They can buy and sell still, even when the market's closed. So the market stops moving when the market closed this day, let's say at 9 p.m. on that Thursday there. And then at 2:30 p.m. the following day, when the market opened, it looked like it had jumped down there. But really, it just meant overnight, loads of people were selling. So then the market was here the next day. Does that make sense as a concept for you guys? Yeah? Cool. Now, it's a problem for us if it jumps down. It could be a really good thing. If it jumps up, who knows? If you're looking to get into a stock, so you're not actually invested in it just yet, and it gaps down, that's great, because suddenly what wasn't quite an opportunity just yet suddenly is overnight, because it's dropped so much. You're like, oh my God, this is a great opportunity. So that's one way that earnings can be really beneficial for you. You might be looking at a stock thinking this is amazing, but it's nowhere near ready to invest. And then instantly it is. Okay, so that's one reason to take notice of earnings. Hopefully that makes sense. Another time to take notice of earnings, and this is where I said it's a little bit more advanced, is if you're in a stock. Okay, so if you're in a stock, let's go back to AMD. Fine, let's do it like this. So let's pretend I'd hit 10% profit. So I've got my stop loss in just above break even. Yeah, so stop loss is here, all good. Now I'm watching this day to day, and then suddenly I can see earnings is coming up. Now the reason that I need to take note of this is because let's imagine there's a gap overnight, and the stock jumps from there to there. It actually, I don't know. Does anyone know what happens with your stop loss? What do you think would happen? Do you think it would sell at your stop loss? Unfortunately, it doesn't, right? Because it jumps. Essentially, if it goes from there to there, essentially, it was never in the middle. So it can't sell it at your stop loss because the stock was never there. So while you think you've got your stop loss there, it will sell your shares where the market opens, which is the next best price, which for us wouldn't be good in that situation. Right? That would be a bad thing because it'd sell it at a loss. Before I say the next bit, does that make sense? Yeah.
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 So how do we avoid that? Well, when you're in a stock, you want to take note of when earnings is. Now, this one's, months away, so not an issue. But let's say it's coming up soon. When earnings are coming up, it will say, I wonder if I can find one that's coming up soon. Right, I know this one was in the past, but fine. When earnings are coming up, it gives you a bit more information. So say the date the earnings are coming out, and there'll be a little icon next to it. It will either be a moon or a sun. Okay. Now, the sun means the earnings are going to come out the morning of that day. Okay. So like before the market opens, this would come out, this information. If it's a moon, it means the information is going to come out after the market closes. Okay. After 9 p.m. So why am I telling you that? Well, it means the jump or the gap is going to happen at different times. Because if the earnings is coming out before the market opens on Tuesday the 6th, well, as soon as the market opens on Tuesday the 6th, you're going to get the jump. Okay, the information's there. If it says like this, the information's coming out after the market closes on Tuesday, when do you think the jump's going to occur? What do you guys think? Have a guess.
After 9.
But we wouldn't see it, right? Because the market's closed. So when would we see it?
The day afterwards.
Exactly. Wednesday.
Tomorrow morning.
Yeah, exactly. So when the market opened the next morning or the next day. So you wouldn't see it until Wednesday at 2:30 p.m. Okay, so that's good for you to know because that's when you need to set maybe like a little reminder on your phone to take a look at this. Because how are you going to know where it's going to open? How are you going to know it's going to jump? Well, there's something on TradingView called a pre-market and the post-market price. Okay, so if you've ever looked at TradingView in the morning, well, anytime before 2:30 p.m., probably like the 4 hours before 2:30 p.m., you might have noticed there's like an orange line on your chart, kind of like this price line, but an orange version. That's called the pre-market price, and it's essentially showing you where the market is likely to open based on all the orders that have happened overnight. Okay, now it's not an exact science, but it's pretty accurate. It's a good indication. Okay. And that will keep moving all the way up to 2:30 p.m. until the market opens. And then the market opens and there's a new candle. Okay. That's how that works. So if you know the earnings are coming out today, let's say, and you're like, oh, I need to check to see where the market can open, and you look at the pre-market prices down here, well, you can say very confidently, this is going to jump below my break-even point. Yeah, give me a loss, right? So obviously you don't want to do that. So if that happens, if you look at the pre-market and it's below your stop loss, I would delete the stop.
Yeah, for about another 10 minutes.
Oh, sorry, I'm just going to mute you there. So yeah, if it was going to drop below my stop loss, and below my break-even, I would delete the stop loss. Okay, it's quite a key point there. Okay. So just last time to be really, really sure. If it's going to drop below the break even and the stop loss, I would remove the stop loss and just continue in this investment as normal. Okay. I'd rather stay in it than take a loss. Okay. That's what I'm getting at. All right. So that's the first thing. Now, this does only happen once a quarter per stock. So this isn't something you need to be thinking about all the time, by the way. Literally just once every 3 months. And you're only in a few stocks at a time. So just be mindful of that can happen. Also, by the way, if you check it and it's gapping up, happy days, keep watching because you're going to have to get your stop loss in and keep locking in some more profit, right? So it's not always gapping down, but just to show you that that's something to be aware of. Last little point on this. As you might have realized, I said to do that if the stock was going to drop below break even and the stop loss. Okay, so a loss. If you're at like 10% profit or your stop loss is at 10% and it's going to jump below it and hit like 6%, I would actually just leave the stop loss in. And I'll be like, look, 6% profit, cool. Like it's still a profit. I'm out. That's absolutely fine. It's not a loss. I would take it. So I'd only actually remove the stop loss if it was going to go below zero. Yeah. So if I make a smaller profit than I plan to, I'm okay with that. But I wouldn't accept a loss on that. Yeah, can you guys see the distinction there? We're good with that. Cool. This feels a bit more technical than it is, but yeah, it is literally just once every 3 months that this could occur. All right. And there's not always going to be a gap either. You might just look at it and it's going to be pretty similar, so you just don't do anything. All right. Would anybody like to ask any clarifying questions on that there? No? All good? Yeah? Okay, fantastic. Cool. All right. Apologies.
Sorry, Ben, I just have, and what you just said, you would only remove the stop loss if you're going to go below 0.
Exactly. Below your break even.
Okay.
You sound like you want to ask something else about that. Go ahead.
If it's going in the expectation that you want to stay in the investment and it's going to bounce back up.
Yeah, exactly.
Okay.
Yeah.
Okay.
I'd rather continue and just see it play out rather than take the loss.
Okay. Thanks.
Yeah. Good question. All good. Anyone else with a question on any of that? No? Okay, fine. Cool. Right. So as I said, apologies, we've run over 7 minutes there, but hopefully that was useful. Now, next week we're moving on to portfolio management, which, as I said, is the bigger picture stuff. Like, it's a lot more about the guidelines to follow to make sure that you are successful with this for the next 2, 5, 10, 20 years and beyond. Okay, because each individual investment is great to be able to do, but you need to have a game plan essentially to make this part of your actual wealth building, as you might imagine. So, in preparation for that session, all I want you to do, and you can do a real investment if you like, it could be a fake investment, doesn't really matter. I want you to do the entire strategy from start to finish on one stock, just one stock, okay? The reason being is because I want you to highlight any points of the strategy that you don't feel confident on. Okay, this is really, really important because I know we're getting into like the end of the 12 weeks here. So I want to make sure we really nail every step of the strategy and you feel confident with it. That's the most important thing. So, as I said, I know some of you have moved on to real investments now. So great. You could find a real investment and do it. You might not be comfortable just yet. So you might be doing a demo. That's absolutely fine as well. But do the process, one, to keep it fresh in your mind, but two, just to see where are the little gaps in my knowledge. And you might do this thing and there might not be any opportunities at that day. That's totally fine. At least you did the strategy to find that out. Yeah? Does that make sense to all of you guys? Yeah? Yeah, just to keep that momentum going. The worst thing you could do is not do anything for a few weeks, and then you get a little bit rusty, and you're like, oh God, what was the thing? So just want to keep the wheels greased, so to speak. Okay. So we'll do that. Obviously, as well, as I said, still here to place all of your investments with you guys. Just in case you haven't got that link, I will drop it back into the chat box here to help. I know some of you have done it already with me, which has been excellent. Good job. Let me give you guys the rest of it. Yeah, there we are. Drop the link in the chat here. Yeah, if you want to place your investment with me, that is for you. There we go. Cool. As I said, it's the same link always. So if you haven't yet, click on it, save it somewhere because you can use that whenever you like as well. Here to help however I can. Awesome. Right. As I said, next week is portfolio management. I will give you a heads up. It is a bit more of a note-taking session, I would say. Just because as you can imagine, if you're planning for the next 5, 10 years, there's not necessarily many buttons you need to click today to do so. All right, so do come prepared, ready to take some notes. But yeah, it'll be really, really useful. So if you can be here live, please do. I know it's bank holiday in the UK next Monday, so hopefully it means you're off. Those of you who work as well in the evenings. I'll be here, so we'll be doing the session. If you can't attend, totally appreciate that. That's fine. You can catch up on the recording. All right. Yeah, Anthony, I will speak to you afterwards on the phone. And Hammy, yeah, I've got yours as well. So thank you very much, guys. If any of you do have any like questions you kind of want to ask outside of this, because you don't feel comfortable asking in front of everyone, please do message me. Okay, this is an open invitation. If anyone's sitting there struggling, please reach out. I want to make sure we really got the momentum for you leading into the last few weeks of this. All right. So please let me know if you need anything. Other than that, I hope you all have a fantastic week, and I'll see you all on Bank Holiday Monday. All right.
Thanks, Ben.
Thank you.
Thanks so much,
Thank
guys.
you.
Bye,
Nice evening to
everybody.
everyone. Bye.
Bye.
Thank you. Bye bye.